What's going on, everybody? Happy Monday. Thanks for checking into our latest Trade to Black live stream. I'm your host, Shad Dales. Welcome you in here on a Monday. How's everybody doing? I hope you all had a great weekend. Jim Cacioppo, CEO of JUSHF, is coming up, going to get us an update on both Pennsylvania and Virginia. We had Trent on Friday. We're going to have him on as well. Plus, we're going to talk about some IRS tax liabilities and how this stuff all works, because when we look at taxation, I would have to say Jim Cacioppo, if not one of the smartest people when it comes to really understanding the framework when it comes to taxation in the industry. As well, an update. We had Don Murphy on last week. Well, today, David Culver and David Mangoni from the United States Cannabis Roundtable is going to be coming on. They're going to talk about latest updates out of Washington, some of the progress they've made, and really what their strategy is and how it differs from others when it comes to getting in front of the right people. So lots to get into. So we welcome in AV here on a Monday. And, he's playing hurt today. Got a little bit of a temperature, but you doing all right, my friend?
Yeah, it's woke up with a little bit of a flu, but shit happens.
What do you think of the new stock ticker? You like the stock ticker?
It's nice. It adds some vibrancy to your background.
All right, so we're setting your setup in the next week or two, so it'll match and it'll look good. But all in all, you like the if you had to give it a scale 1 to 10, what do you give it?
It fits the entire frame, which is nice.
It does, doesn't it?
Yeah.
All right. Time to pay attention. All right. So with that, let's dive into today's live stream. Let's welcome back to the podcast the CEO of Jushi Holdings, Mr. Jim Cacioppo. Good to see you. You're out in LA, my friend. How's the weather?
Yeah. Good to see you guys. Yeah, happy to be here.
Good to see you. So what do you make of this market volatility over the past week or so? It's been a lot going on, but how you, appetize or digesting a lot of this stuff right now, because there's no rest for the wicked, because it's a lot of up and downs for sure.
Yeah. I think listen, I think cannabis already was beaten up. We're sort of like the canary in the coal mine. If you look at, I always think of cannabis over the last 10 years since I've had a hedge fund, since I've traded it. It tends to go down way before, months and weeks before, like a small cap does, like the Russell. So from cannabis perspective, we got beat up sort of early. And I think the market's building a low. It's going to continue to be some volatility and, maybe test on the S&P, the 4,800, 4,850, whatever it is, or 5,000. But I pretty much think that, 5,500 to 5,000, 5,200, there'll be a range in there for a few months as we get through the uncertainty. So, it's a good time to probably invest, and build positions for the long term if you have good companies to buy generally.
Well, it's just another example, I think, with this industry right now. It's just all about reform play. I know a lot of states got to get a lot of things passed, but you looked at some of the stocks last week, and again, they continue to just sit there and really nothing moves all that much. Yes, they were down, but have you had any conversations with people on Wall Street, hedge funds? I know last time we'd spoken about based on a lot of your connections, but have you had these types of conversations regarding the industry as a whole?
Yeah, so I during this time, I wouldn't call hedge fund friends, or because they're hiding under their desks, or they're getting beat up. They're trading portfolios, especially the kind of people I know who did distressed and sort of event driven, because it tends to be a short vol trade. So when volatility spikes up, you tend to lose, in your money, because it's less liquid part of and you're trading against other hedge funds. So it tends not to be great. So it's not a time to really, I know what those guys are going through, and they're kind of trying to hang in there, worried about their capital flows long-term in their business, and just trying to trade out of this thing and protect the downside for their investors. And you won't see it. I don't think in a downturn like this, you would see cannabis, particularly get a lot of attention, unless there's this huge comes, But having said that, it's not a bad time to build if you had a positive scenario, right? I mean, it's not a bad time to build positions. And in my hedge fund, I bought some other companies that aren't Jushi. Can't buy Jushi because I considered a control shareholder, more or less, and can't do that in the open markets. It has been that way for quite a few years.
Yeah, well, you are building, and last time we had you on, that your company Jushi saw an influx of cash from a significant debt deal, which is a big step forward in bolstering your company's financial position, which we talked about. You've also mentioned reframing tax liabilities as tax disputes with the IRS, emphasizing the upside opportunities rather than traditional debt burdens. So I want to continue that conversation. So with that, can you elaborate on how IRS-related activities are really influence your financial strategy and what this really means? Because I know, like I said off the top, if there's anyone that understands taxation in the industry, it's you. So you want to maybe elaborate off of that?
Yeah, and when we talked last time, just to update those who weren't, you had on some folks sort of a few days before who were very much talking about them as tax liabilities, and I had caught some of that, trying to sort of get. It's the first time I've been on in a long while, so I was trying to catch the vibe of the show, and I sort of watched some outtakes, and that one it ticked me off a bit because they're counting it as tax liabilities, and debt liabilities. That in their analysis, and a debt has a maturity and an interest rate that you pay. So you're typically required, the vast majority, 99%, are cash pay instruments, and so you're paying it, and then you have covenants which could cause you pain, meaning you have to comply with certain metrics to keep from getting what's known as a waiver from your lenders, which they often give, in many industries. But with the government, it's out there, and they haven't been, as far as I can tell, as an investor, particularly aggressive against the industry. And we know from doing diligence in California, they regularly have negotiated pennies on the dollar, because these California folks, there's a lot of people in California that have owned retail establishments, individually or a few of them corporately, for decades really. And so they've been dealing with this, and they don't pay it. We diligence these guys, and then you look at their tax returns and you see what they ultimately pay as a fraction. There's a public company called that was called Harborside. And I forget the name of the new company that they merged in, State House. State House, yeah. And so if you look back at people who do work and want to do work, you can go back and look at their 10Ks and 8Ks, and you could see that they, and they still exist, even though the company may not be public anymore. I don't think it is, but you can still go back there and get those, and you can see what they negotiated for. We thought it was like 10, 15 cents on the dollar. So anybody can access information. That was a negotiation with and settlement with the federal government. And noting that they ultimately defaulted on that obligation in a restructuring. So I think the government well understands that, this is a tough game, and sort of getting, just that's part one. Part two is, why is it an interesting, it's not that we just negotiate with the government, negotiating tax. What it really is we have, things that, if you look at companies generally, again, I used Apple as the example, or technology companies like Qualcomm's a good example. They have this double iris thing they do. They never share publicly anything. And these things have been controversial for 20, 25 years about what they're doing. You don't disclose your tax advice. It's not disclosable because you have experts doing this, and they don't allow that to be disclosed. And it's not a good strategy, but it is a big thing for the small cap sector. So I understand why people would want to learn more and would appreciate disclosures, but it's just not possible. But we all believe, and the vast, I think there's only one company that's of any scale that's paying their 280E, and well-known company. And everybody else has taken, a very similar position, different advisors, different people. So there's a lot of law firms giving these, letters. And there are real theories of why you aren't required to pay these 280 liabilities. Now, if I were an investor, and I am, I would ask in the sector, I'd ask, well, why didn't you guys do this 8 years ago, right? Or 7 years ago, or 5 years ago? First of all, we did it, Jushi. We always manage this, and as a finance hedge fund person, we tend to be very good at certain things like M&A and debt structuring. The structure of our debt is very different from other companies, and just all these things that have complexity to it. And TrueLeave was one of the first big ones to do it. But I would say that for the industry, if you talk to people who used to work at the DOJ or the IRS who have prosecuted, did the Harborside deal, for example, they said, listen, you all were poorly represented. Nobody was investing in this, and everybody just took a route, that didn't do the work. And this is why we think that there's, this path to open. And this goes back a few years ago that, we've had these conversations with people. So there was an evolution of sort of sophistication and focus by the industry, as opposed to just blindly paying the tax. And taking, and by the way, one of the reasons why people did that was because it was this theory it's going to change quickly with legislation or whatever. It's going to change, and let's not worry about that. Let's focus on the public markets, getting valuations. Obviously that didn't work out because regulation has been so slow to change on the federal level, and in a couple of big states like Pennsylvania and Florida, for example. So that didn't work out too well, and the markets lost interest in the sector. So I think that's like the deal. Now, remember, there's no maturity on these potential liabilities, right? And the accountants force you to put it on your balance sheet, because that's their job, to let investors know what's the max liability. That's their job, and people should. I'm happy as a director, chairman of the board, and officer of the company that we do that, because we've explained the downside. So it significantly takes away liability that we might have as corporate officers and directors. Disclosing the full potential. So it's the right thing for the accountant to do. And it's the right thing for us to do with legal advice. And that's why there's this big disparity. So I think those people who go out and talk about a tax debt need to be challenged, when they go out there, waving sort of like, like, oh God, this is so terrible. I think they just haven't done the work. They don't have the experience. They're financial analysts of companies, not like, highly structured people who've done this before. That has been their jobs.
Nancy,
so in the event that we do get rescheduling and we go to Schedule 3, which would nullify 280E, do you think that the natural step for a lot of the companies in the cannabis space is going to be to pick up the phone the next day and call the IRS and say, let's make a deal? Like, let's finally put this to bed and move forward? Or how do you want to go about this moving forward?
So I think there's some of the bigger folks who have the big market caps who want to get that mojo in the public markets. You could see why they would have motivation to cut deals at favorable rates. And you would see why the people at the IRS or the government might lose focus on this and say, like, why are we just doing this? This is kind of ridiculous. Let's just move on and, take some money and move on. So you can see why there'd be a deal. But I would say that, what the industry has learned is there's not a lot of senior level focus on the IRS on this, period. And you're trying to deal with like people. And then now in the federal government with the cutbacks that the current administration's doing in the federal government, you've seen the IRS get hit. It seems like it might be hard to resolve so quickly. And I think people might just have to move on from this issue, right? That's what I think. And by the way, there's a long history of the markets of just saying, oh, I'm so worried about this, right? And then all of a sudden losing focus and saying, wow, this is going to work out for the industry. And maybe there's a 20% discount to, because of this or something like that. That's a scenario. And by the way, if you look at something, if you want to be bullish and put money to work in the stock market right now, generally outside of cannabis, in cannabis, whatever it might be, you have to get comfortable with this whole tariff thing, right? Mm-hmm. And obviously the market was super concerned about it 2 weeks ago and a week ago, and not so much last week, and this week, right? Still concerned. The volatility hasn't gone away, and you'll continue to see it. But what is that? The market's just getting used to, that, hey, that's out there, and we think that's going to, resolve itself. It's not as bad as we thought. And by the way, in the tariff thing, there is a very political aspect to that discussion, right? And there's a very political. So you have people who want to, take down, the Trump administration or Republicans who go against it. Then you have people on the other side, the Republicans who want to go for it. But, people are losing money. There's no question. And it should create volatility, has created volatility. And the administration has acknowledged that publicly or before it happened, right? So but you see everybody just gets desensitized to it. Then that's just a small thing that people are focused and your audience can be focused on now that could happen that we get no credit for as an industry. So if you look at a fair way to look at, and I'll stop talking, sorry, Shad, because I know I go on these monologues, but if you look at optionality to the upside, and the whole industry is trading like an option, meaning huge, it's a call option essentially, and you have option, like in Jushi, an option if Pennsylvania flips, if Virginia flips, if Schedule 3 happens, if banking bill happens, we have an option if the stock market clears up and goes up. There's a lot of different options out there, but there's certainly an option on all of this stuff, just getting the noise going away and everybody's just focused on the fundamentals.
Yeah, I was just going to say, what's the takeaway then for investors that are trying to understand and wrap their head around all this? But it's all based on execution from what I see, right?
Yeah, I think it's execution. Listen, there's going to be a segment of the investing population that just says, I'm not focused. I'm not doing this because of this tax thing. That's not my area of expertise. Blah, 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 blah. I'll move on from the sector, right?
Yeah,
so that's
I get
going to happen. That's already happened. That's happened from the beginning. Maybe more people have used that as an excuse not to look at the industry. But there's going to be people saying, wow, these stocks are really bombed out, washed out. I should focus in. What are smart people saying about this? How can I get comfortable?
Yeah.
And you can even hire these lawyers yourself as an investor. So if you're a hedge fund, by the way, like I do, but historically, I've hired lawyers and tax advisors to get me educated on what it is, and that doesn't cost a ton of money. They're out there, they already know it, and they're just advising you, right? So that kind of stuff, people can get smart. That's what hedge funds do, right? That's what active type investors do. So there's a scenario where that just happens, and I think there's probably a big payoff for those who get that in there early. Like distressed investors, what I did would do something like that. Arbitrage investors, corporate arbitrage investors would do something like that. So,
Jim, you
I
mentioned.
think,
You mentioned tariffs. With the nature of the way that Trump's been going about tariffs, putting them on, taking them off, we've seen large tariffs been placed on China with then carve-outs for certain products. Are there any facets of the business that's being affected by tariffs, whether it's components on vape, packaging, anything like that? And if there is, are there plans to reshore it into the States to not have to?
I think you've hit on it. I think you've hit on it. It's the vapes, it's cartridges, packaging would be easier. You get the printing press. I think packaging is done locally. You want flexibility. I forget who we source from packaging, but I don't think that's a big deal. I think it's the vape carts, basically, and those are typically sourced out of China. And I think it's a small component in the overall cost. So I don't think and they're not going to be able to pass it all through. So we'll figure that out. And there are competitors, like we are switching people, and I forget if the new one, but my team is looking at that. But it's not something like, my yields on the flower side, which is like 50% of everything, and my quality on the flower side trumps all of that. If not to use the Trump name like that, it's a Trump card, right? And so like and if Pennsylvania flips, for us in the short term, so we're managing that risk, and I have that's something, John Barrick, my president, will be very focused on, our supply chain and these kinds of things, and we're focused on that. But we haven't reached my levels yet. My assumption is, we're going to do all that work, but you'll end up getting to things that are a little bit more economic, as you do with Apple over time for a lot of different things. I don't think vape carts reaches that thing, but there's other people who make vape carts in the world too.
Okay. One of our viewers is asking us, ask Jim about his debt. I don't know how much specifics of that, but it was a question I wanted to highlight just for somebody to reach out. But do you want to elaborate off of that?
Absolutely. I think I understand their question. Yeah. And it's so we have a first lien and a second lien that's very different, right? And so the first lien we refied last year in July, right? Yep. We had a lender we had a maturity, and we just pushed it to where the second lien was which was, sort of the end of 26, because you can't take a first lien past the second lien. It doesn't work that way. They got to mature at the same time or sooner. So that's what we did and why we did it. And that's an obvious thing, in the debt markets, like, that 10 times out of 10, first lien's not going to go past the second lien to maturity. So, and then what we've been doing is issuing warrants to the debt holders since the beginning. So we've been doing that since 2019. And that's obviously been a good trade for our shareholders, because, we just had a huge amount of warrants expire worthless at the end of last year. And so it's basically, like I said, it's selling vol, right? You're selling the stock, you're not really selling stock, but you're selling the vol of the stock, And so that's worked out for us. Our shares outstanding have been flat, since last time we issued, stock, because we issued new warrants for these debts, the first and the second lien, but they replaced older ones that were actually less than the older ones in terms of the number of warrants. So it's worked out for the company, our strategy, because we've been employing it long term and consistent with it. And one of the reasons that we do it that way is we think that it brings down cash interest and effectively in the cost of debt, and we think that's a fair trade, right? And I've been a big holder of the debt, right? I in this last refi, I personally did about 20% of the outstanding amount of first lien, and other shareholders did a fair amount. So the shareholders own a big segment of that first lien. I don't want to say the exact percentage, but it seems to, because I think it's over 50 if I remember, and 50%. And it's a $48 million issue. So we think, and then the shareholders have a huge interest in the second lien debt as well, including myself. I own about, like 12% of that maybe. And the second largest shareholder owns a ton of it as well. And that adds up to more than 50% for sure. So we feel like we have friendly holders, and we feel like we're going to be able to roll, as a company, which is one of the reasons why we're investing in this whole retail system. So my money is where my mouth is. Not only have I invested in the company, right, including the stocks, I get the warrants, and I love that. So I'm getting leverage to the upside. And when I said that the shares outstanding hasn't changed, I'm talking about fully diluted, including warrants and options.
Yeah.
And so I'm investing with my money where my mouth is, but also as a company, we're actually using our free cash flow now to build the business in Ohio and New Jersey, and we're opening retail stores, and I guess we could touch that out. We're going to talk about that in earnings and give an update, but we already have talked about that, but we're basically close to plan on opening up retail stores, which is a big investment adding to our GPs. So we're not just playing defense anymore like we did before the refi last summer.
So the way I see things is, look, somebody asked, does pushing debt actually address the issue, which one of our viewers just not mentioned right now. The status quo, it's clear to me that it's not going to stay the same, what the timeline is, but you're going to probably see changes in Virginia, probably in changes in Pennsylvania, hopefully by the middle or towards the end of like Q4 this year. So based on a lot of the way you're handling stuff, are you anticipating, like, if we're having this conversation, let's say in a year from now, would you be shocked if we're not talking about a completely different game plan as to Pennsylvania passing, Virginia, obviously, with the governor's race? What are you anticipating here in the next few months?
Okay. So on the regulatory side, re-ask that. Just remind me, comment on the regulatory. You don't have to go through the whole thing again. Okay. But on what your viewer asks, is pushing enough on debt. I just want to specifically address that. The answer is for all companies, no, clearly. Yeah. But for companies that are growing quite dramatically, it very well could be. And we think, my bet is it absolutely is. My bet, I put money in. I put in the last 12 months or 8, 9 months, whatever the hell it is. I put like 13 million. I took on 13 million or so of debt, 12 and a half maybe, all right, of debt into the company, right? So clearly I've taken a bet there, right? That's not a joke, right? That's real money for anybody. And and the reason why is you measure debt, it's not like how much debt do you have standing. It's how much debt do you have, how much cash do you have, and also what's your EBITDA. That's a typical measure, debt to EBITDA, that high yield investors and distressed investors people look at, right? So if my EBITDA doubles, which I think given the regulatory stuff is a possibility. I didn't say I'm not projecting it. All of a sudden my debt to EBITDA gets cut in half, right? So like that's the measurement, and that's why I'm super interested in doing the debt, and because I think it's a good trade, it's safe, and also getting the warrants because I think there's a lot of upside in Jushi in particular, and some other companies probably as well. When we do solve that equation, and the best would be regulatory change. Now the regulatory change is most certainly going to happen. The question is do we like how it changes in Pennsylvania, Missouri? Is it a good law? Does it treat the industry well? Is it good long term for the industry and therefore the state and their tax revenue? Or so that's the key thing is it's going to happen in both states, and also obviously the timing. So that's the answer is I think in our case, Jushi's case, it is a really good thing to push it because we have a huge uptick coming in cash flow, right? And so that's number one. And number two, we've been paying down debt. Okay, we paid down $30 million of debt over the course of the past, year or year and a half or something like that. That's real money, because we have now 100, I think 80 of gross debt, and I'm not going to disclose the cash balance. We've been running between 20 and 30 for a long time of cash. So like that's real money, right? So anyway, I feel like, if for us, it's an appropriate strategy for both us and the investor, and I'm on both sides of that. I'm a corporate officer, director, and also largest shareholder and debt holder, one of the largest debt holders. Okay, swimming to the regulatory change, Shad, listen, in Pennsylvania, there was an article over the weekend, I think a Marijuana Moment, that talked about a bill in the House getting bipartisan support. Two legislators have come together, one Republican, one Democrat. We've been, the industry's been, educating people for a long time. We're involved in the process. A similar bill, we think that they're gonna match it to, we hope, close to what the Senate has. So then you have a similar bill on both sides. There's a state store thing out there, which scares the market, rightly so. But it's wildly unpopular in the state. I think it polls at like 27% popularity, 80% get some huge numbers against it. And secondly, it's illegal because you'd have state workers working in a illegal business. That's a big thing. And third, they don't have the votes. There's no votes. And then even if it did pass the House, the Senate has said it's dead on arrival. DOA. They're very clear about that. I've met with these people. I've heard, so it's like I think it's a negotiating strategy. I think it's a bad negotiating strategy. Yeah, they need to move on from that. And when they do, I think that's going to be a good thing. And I think we're in the process of seeing that with this bill that's fresh news, by the way. This Marijuana Moment article, which we were aware of before it came out, that this was taking place. So I think that's fresh news, kind of, I would say for your audience, maybe, if they haven't read the Marijuana Moment article, this is fresh news about how PA has gone to the better.
We have Michael Bronstein. Well, I was going to say we have Michael Bronstein from Attach on every Monday, and he gives us a lot of updates out of Pennsylvania. But one of the things, the major components as far as negotiations, is this online gaming. How many is there again, Anthony? We say, was there 7 or 7? I can't remember how many locations there were that don't equate to they're not paying taxes for online
there's
gaming.
A ton of locations, but the tax revenue that they're proposing for that is it's about the same as cannabis. So if you add the two together, and don't quote me on this, ask Trent. Trent will give you better, but it's, as I recall, it's between $600 and $750 million, sort of conservatively in that range. I think that's conservative, of taxes between the two, and they're both roughly equal. And by the way, Pennsylvania is running a huge deficit, so they need the money. And so that's, that's for the industry, that's a good thing, because that's when, these changes tend to happen, is when they need the money.
Yeah.
So yeah, that's an important point. Your audience should really, hear from Trent and Bronstein, and, understand that better. I won't spend a lot of time on that. And in terms of Virginia,
I was going to bring up Virginia. I didn't realize how much we're growing as far as the medical market, but there's some staggering numbers. Anthony, you pulled some stuff that said 100%, 110% patient growth in the state over the last 2 years. So with that, what do you attribute that to, and where do you see, I guess, the market in terms of normalization? Because that is a huge growth number. I knew it was a popular state, but I didn't see those kinds of numbers coming.
I would say it's been a slower growing, steady growth business over a long time. That hit inflection point is everybody opened up stores at the same time. Our store base was opened up a little bit early, but we did open up one, sort of 18 months ago. And they take a long time for people to know they're there. Advertising is very hard, so it takes a while to build the momentum. When you can't advertise, you can't do billboards, etc. They don't know it's there. So I would say that it's the market's a great market from a medical standpoint. We love the state from a medical standpoint. It's primed, we think, to go adult use. And I think the dialogue has completely changed on this, okay? And this is new news, I think. I think I'm going to make some fresh news for you, right? So why is the dialogue completely changed? Well, we knew Governor Youngkin. I said it on your show, just go back and get the outtake, right? I very likely that they veto it. He vetoes it, right? Because he did the year before. It wasn't like rocket science, right? And he fashions himself as some sort of religious right type figure, and and running against DeSantis and JD Vance in 28. and so that's what he's playing for. He's not playing for the folks of Virginia. If he's playing for the political and polls of Virginia, he would have been, not pushing, this anti-abortion agenda, and he would have allowed adult cannabis because both wildly popular in his state of Virginia, right? So Youngkin is gone. There's an election this year. It's an off-cycle election, okay? He's not running. He can't run. It's one term. And you should ask Trent about this, but we believe the Democrat candidate is a home run, right? The Democrats have a history of winning after Republican.
Got a 15-point lead right now, according to Trent from Friday. So that's big, right?
Yeah, and huge. And so she's a great candidate, and the Republican candidate is not nearly as experienced. This candidate, Abigail Spanberger, the Democrat, is in the U.S. House. She's a U.S. House member. She worked for the CIA, and I would be shocked, by the way, if she doesn't win. I would. Well,
here's the thing I wanted to ask though. Like, is this okay? It looks like it's good on paper, but will she change any of the framework right now, Virginia? Meaning, could there be more licenses? Because, like, look, she's been very supportive of the industry, but could we see more licenses come online if she's elected as the 76th governor of the state?
Yeah, so I'm not going to comment on this, and I would rather Trent didn't either too in detail, but he's more deft at kind of playing the politics than I am because I run the business, and so I'll let him answer that when you have him on, more detail. But I would say that the bill has looked the same 2 years in a row coming out of the Democrat-controlled legislature. Right. And there was a Republican one that the governor quietly killed. The Republicans wanted to go, in the legislatures and senators know it's popular in their districts. They're not stupid. And they tend not to have this national agenda, but there's no fight for the governor who has tons and tons of money personally and as a politician and has the bully pulpit. So they just rolled over for him. But I think there's broad bipartisan support, and you've seen it in 3 years in a row. And I think that, she seems like a moderate to me. And it seems like my bet, I just put a lot of money in the company, is as broadly, it's pretty similar to what you're seeing, that you've seen. So go read what's out there and analyze it. And it's a good bill. It could be better for the industry. It could be worse for the industry, but it's a good bill. And, we're very confident that we're going to have like a great business, and we've invested a lot of capital. Remember, we have a $100,000 square foot facility that we're still expanding to service the medical market. And we have tons of land behind our thing that we bought. Very expensive land, by the way, in the data center region of Virginia, because that's where our facility is. Okay. And we have tons of land to expand. And my cost of capital, I'm not doing that until we get some wind at our back. And we know, something's going to happen, and we think we'll have time because I think it'll take a year from, when they pass it to when it starts, roughly a year. That's my guess as somebody who has to put CapEx in the ground.
So Jan 2027 is what you're ideally thinking of timing wise, if this were to pass.
I think it'll be the beginning of 27. Think of a year from when they pass it. So they'll, the legislature meets in the first quarter and second quarter. It sort of the business gets done and signed in April or May of this year, or really April, right? It happened already. It's April, so it gets done in April. So you would think that about a year from April or May is when you see adult use sales. And that's what was in the last bill, by the way. It was May of 2026. We're in 25, so it was 26. So you would think May of 2027 if they kept that bill, move that one forward again. And so, but by the way, I don't see how the Jushi stock, and by the way, again, my money's where the mouth is not a huge buy in that scenario where it just gets announced and it's done. It's not like a lot of rocket science to figure out we're going to do great, right? we're not going to go up as much if it went adult use 3 months later, but it's going to be great. So I feel really great about the political prospects of Virginia. We dealt with an industry, and particularly Jushi and probably Cannabis, who had 2 licenses at one point in Virginia. It's been bad for us. The bigger cap companies are more going on in their overall portfolio and more cash flows. But we'll definitely get a ton of upside from this when it happens, in my view, from a cash flow perspective.
Yeah, we've talked about that. 2 big growth states, Pennsylvania, Virginia. Over half your footprint is in PA, so we're watching that closely.
We're building out Ohio too. I just want to. I'm spending a lot of time in Ohio.
How is Ohio? Are you still seeing normalization of sales and revenue start to grow?
Well, we're opening stores, so it's going to happen. But the stores,
Okay.
remember, stores, when you open them, this is why you see growth in Virginia, like Shad pointed out. Like you had all this growth, but the stores have been opening. It's just a matter of people got to know where they are. In Ohio, the advertising laws are more like a medical market. Remember, it's a conservative state. So again,
Yeah.
it takes a while. The key is to get the store open, and the growth happens over several years. Ideally about 2 years. Where you get to that store where everybody knows it, it becomes a good store. And so we're opening stores. We're not buying revenues because it's much cheaper.
Okay.
And it's much better a discounted cash flow analysis for the investor, and that's how we do business.
Well said, my friend. Look, we got to get rid of Siri and just say, hey, Jim, and whatever questions that we want to ask pertaining to this space. Wealth of knowledge, that's for sure. But listen, always good catching up with you. This has been good. One last thing, earnings date. You announced it last week. When's that set up for next month?
And let me take a look at my calendar. It's the first week of May, and it's one of the days
first
of the first week of May. Yeah, it's the first week of May. I think it's what is it?
I can bring it up actually right now.
Yeah, do you have that? Yeah, Thursday. It's a PM earnings update on Thursday, May 8th.
There you go.
Yeah, it'll be exciting.
Well, listen, always appreciate, and I think there's some good takeaways here for people to better understand a little bit more. But again, we talk about updates with Pennsylvania, Virginia, and then just the overall look. We always talk a lot about just cannabis rescheduling, and yes, could it happen? We don't know. We hope it does. If it does, then what are some big takeaways that we should understand from a tax landscape? And I think you kind of explained a few things and scenarios that people should take away from this. But always appreciate you logging on here and providing us information. Let's keep in touch, okay?
Yeah, I appreciate it. Nice to see you, AV and Chad.
Thanks, Jim.
Good update.
All right,
the market.
thanks, Jim. Tell the team we say hi, okay?
I will. Thank you.
All right, take
Bye-bye.
care. Bye-bye. All right, sir. My phone was ringing off the hook while we were doing that message or interview.
Did David and David not get the links?
There's more to the story.
Okay.
Can't get right into it, and I got to keep some of this information a little bit confidential right now, but they are not coming on the show, and we will probably have some reasons why a little bit later on, but just to give people a heads up, they are not going to be attending the show, but that's okay. There's probably some stuff that's come up, but that happens sometimes in showbiz. But we'll just leave it at that. One thing that we didn't bring up last week was this acquisition of SNDL. I know, did we touch on it last week during
the acquisition? We did, not them electing to list on the CSE.
What do you think of that?
I think that Zach is preparing for the amalgamation, or at least the rectification of his assets via Sunstream with Parallel and SkyMint.
Yeah.
And he wants to be able to have an ace in the hole to, if there is a review by his board, and if they do go under a fulsome review and they do want to combine and consolidate numbers, he's got the vehicle to do it. It does not imply that they're going to delist from the NASDAQ as it is right now. I don't see him doing that, to be completely honest. I think this is just him preemptively wanting the flexibility to be able to do that if and when the time comes. But you had heard him last week when he was on, or 2 weeks ago, when he was on, the litigation around Parallel and SkyMint should be coming to a close here within the next month or so,
Yeah.
month or two.
Yeah,
that'll mean that they're probably going to take controlling interest in those assets. And if and when they do, there could be some sort of strategy as to how to combine the financials and the numbers.
Yeah. If you didn't get a chance to catch your newsletter this morning, a heck of a story that you wrote, AV. If you're going to get a chance, make sure to scan that QR code, become a baked-in newsletter subscriber. But sounds like Mr. Governor Ron DeSantis is getting a little bit of trouble based on this. What is this? $10 billion slice of Medicaid legal segment has become the epicenter of political turbulence in Florida. You want to elaborate for those that didn't get a chance to see, or maybe some takeaways for those that have read about this story so far?
Yeah, I mean, Ron got caught with his pants down effectively, siphoning off money from bucket A over to his wife's charity. Wow. From what I've heard, it's not illegal, but it
Well, you wrote, shortly after receiving the money, the foundation dispersed $5 million each to secure Florida's future and save our society from drugs. Two organizations that have funneled millions into Governor Ron DeSantis' anti-Amendment 3 campaign aimed at stopping, obviously, recreational marijuana legalization. So, yeah. This stuff doesn't surprise you, but when you find out about the truth, it does in some ways, and you're just like disbelief. But I don't know. What do you say to that? I know what I say. Bring on Byron Donalds.
Be careful what you wish for.
Think so?
Let's wait until he has a stance on it. But as per this morning, there was an article that ran that Kim has already contributed $20 million more to Smart and Safe in the first quarter of 2025.
Why do you think that is already? That's a lot of money.
I have no idea. I'd love to talk to her and understand what's going on, because just starting to go back to the deploying capital into it aggressively when we don't really know what's going to take shape, nor do we're going to have to go up against DeSantis again. I don't want to do that. I don't know if it's a prudent use of capital to, let's say, throw another $100 million at this thing going into 2026.
Mm-hmm. Good questions to ask, but I can't speculate because I have no idea. CGC have to ask, now that it's over $1, is it the low end? Can't answer that question for you. No idea. Can't answer.
Oh, Curaleaf had decent news this morning, actually. Boris launched an Anthem brand for Curaleaf pre-rolls. And the messaging on Twitter via the Curaleaf account and Boris's account was made in the USA, with Anthem as the brand. Man, so he's obviously trying to speak to someone. Nice brand. Look good. I think companies need to probably start to own, or MSOs need to start to own that whole form factor of pre-rolls in a pack like you would see cigarettes.
They are playing that card big time right now, made in America, especially when you factor in some of the people that were funding some of the content was produced a couple of weeks ago at the USCR. And, I know it was very controversial with some of the messaging, but they're playing that card right now. But we're in that type of environment right now. I don't want to say desperate times call on desperate measures, but man, things have got to change. And I'm sure there's a lot of people on here today that are frustrated equally as we are. But all I can sit here and say is that progress is being made behind the scenes. And you may yawn and shake your head and be frustrated when I say that, but that's just the reality. And Eric said last week on Friday that this has taken obviously a lot longer than we were anticipating. But one thing that was clear based on his takeaways is that he feels strongly that this administration is going to get something done. And that's someone I like to believe, at least being from an attorney that's got his ear to the ground regarding the space. But what do we got set up here this week? Seth Yakutin is going to be joining us. What's that stock? ABNCF up 23% on ER.
It's Avicano.
Yeah, I see that.
Yeah.
Nice job. What we got set for? Oh, we got a big one. Big one on Wednesday. We have both Anthony Cogniglio coming on, and as well as how do I pronounce his name? Jim Higdon?
Higdon. Higdon.
From Cornbread Hemp out of Kentucky. At a testimony basically talking in Texas, but we reached out to him and he's coming on Wednesday. Should be a very, very interesting conversation. We're going to piggyback off of some of the stuff that we had with one of our viewers on Friday, which is Brian Dabrowski, who represented the hemp industry, but I thought it was good dialogue. We look to aim to have the same thing, really get an understanding of what they're thinking on the other side, what their perception is of the cannabis industry and vice versa. So that'll be good. And then, as I said before, on Good Friday, we're going to figure out whether we're going to have a live stream or pre-record, but all in all, we'll have content featuring Seth Yakutin Friday morning at 11 a.m. So a good week of some guests coming up. So that's a wrap for today. I'll let you go because I know you need some rest. You got a little bit of a fever. So I'll let you get some rest. In the meantime, everybody, thanks for logging on. We'll see you back here Wednesday at 4 o'clock. Don't forget to leave some comments below. Keep this conversation going. Love to get your feedback. All right. Thanks again. See you back here Wednesday at 4.
Thanks, everybody.
Hey, everybody, stay connected here. The latest Trade to Black podcast. Another great episode under the belt. What'd y'all think? Do you like what we had to say? Please leave any comments below. And as usual, make sure to subscribe to our Baked In newsletter. Check us out on Apple and Spotify. And if you haven't done so already, make sure to smash that like button, leave some comments, as I said before, and subscribe to our channel because we wouldn't be here without you. Thanks again, everybody, for watching.